You were listening to chartingwealth.com for Friday the 15th of September 2017. We see for the day on Thursday, we see that the market was down as far as the S&P 500 went, 0.03%. It was also down for the Qs, which is the NASDAQ 100, the tech stocks, 0.58%, and it was up for bonds. Hadn't seen that in a little while, and also up for gold, both of them around 0.4% or so. So let's first jump right into what happened on Thursday on the S&P 500 and what we're seeing the week shape up like. We continue to see the PPO, the price percent oscillator, very similar to the MACD for those of you not familiar with it. Great training at the website chartingwealth.com. Oh, and as an aside, the mindset training, we're posting it with the email going out. If you're listening to this video podcast right now and you receive it via the daily market review that we send out every day, in other words, you're a subscriber at chartingwealth.com, please check right underneath, click here. You'll see all three of the mindset videos. If you've already listened to the first two, then it'll be just the one new one, but we have all three posted on the Friday podcast. If you are not a subscriber at chartingwealth.com, maybe you're listening on another platform, maybe it's YouTube, maybe it's Facebook, maybe it's Twitter, well, you need to go and subscribe. We will post everything again next Wednesday, but please make sure right now you go and subscribe. It's absolutely free. Nobody spams our list. It's our list and our list only. You'll receive everything we have to offer, from the mindset training to the daily market review, of course, every single day, to the layout at freestockcharts.com, the how to read a stock chart video, and the three worksheets, the daily market worksheet, the weekly market worksheet, and the trade sheet. Okay, let's talk about what's going on in the S&P 500. Still hasn't managed to cross over, going up on the price percent oscillator. Derivative oscillator is also still in the negative. We do have an up week. 3 up weeks. Looks like we're probably going to finish with an up week, the third up week in a row, reaching higher highs from where things started moving down, actually higher highs, period. But what do we see going on? Well, not enough movement yet to drag over, at least as far as where things closed on Thursday as we went into Friday. And it doesn't look like there's going to be enough of movement. If the market booms on Friday, yes, it may close up, but down a little bit for the day, hasn't crossed over. Weekly, still in a confirmed down move. Now let's go to the 2-day chart. What do we see? 2-day chart, we now have two 2-day candles of strong up movement. We had, of course, the 2-day candle ending on Tuesday, the 12th, was a strong up movement candle outside the Bollinger Bands, and the 2-day candle ending on Thursday, the 14th, also strong up movement, crossed over going up back on the 12th, the 2-day candle ending on Tuesday, the 12th, so strong up movement all week long, except for a little bit of a rollback on Thursday, down again 0.03%. What do we see happening? We talked about this yesterday. Appears to be a topping somewhere around about the 250 price range. Is that it? We don't know, but we do see on that 4-hour chart things are bending back over on the price percent oscillator. However, of course, derivative oscillator still in the green, losing energy. So we'll continue to watch. Maybe the market's just digesting those gains, going to pop up even further, has more room as far as inside the Bollinger Bands. And again, those are basically your volatility bands. That's what they are. They're like rubber bands. The market can move outside of them, but typically doesn't stay outside of them for very long when you start looking at things, because there's no, sort of think of that as outer space, and there's really no oxygen to breathe. So things always pull back in. Now, let's keep moving through these charts and do one other aside. I want to thank you for all the questions, all of the emails. We have been sending out lots of links to the quarterly training. We've also been sending out lots of links to all the other things. And again, just as a quick reminder, if you want the layout that we use at freestockcharts.com, our worksheets, all those things, just sign up for the daily email. It's free at chartingwealth.com, and you get it all for free. We're happy to get your emails requesting all that stuff, but it would save everybody time and energy if you just subscribed. That's what we tell you to do. So please do that. What do we see going on the Qs? Again, the third week of up movement on the Qs, pushing up on the Bollinger Band at the top. But look at the Qs. Sideways on the price percent oscillator. Derivative oscillator still negative. So even with 3 weeks of up movement, not enough power to rotate over the price percent oscillator or the derivative oscillator. Could happen next week, but is the market topping out? Let's continue to explore that question as we look at the 2-day chart. We see that on the NASDAQ 100 all the way back to the 2-day chart ending Friday the 1st of September, that's the highest high that's been reached. It has not hit that since then. We did have a vertical crossover on the 2-day chart back on Friday the 1st of September, but again, it stayed awfully close to the red signal line. See, derivative oscillators lost a little bit of energy on that last 2-day candle. What do we see going on the 4-hour chart? Well, it's actually crossed back over, going down. Now, does that mean you have a trade? No, it doesn't. Why? Because that pesky 2-day chart is in a confirmed up move, so you got a bit of schizophrenia between the 2-day chart and the weekly chart. Remember, both the charts, the big charts, have to be going in the same direction as the 4-hour chart. So we don't have a trade on that yet. But just be aware, 4-hour chart has rotated over, going down. So we'll continue to watch, and tightened up significantly, meaning this sideways slide has drawn in the volatility band, so there's not as much volatility at this point. We'll continue to watch. Don't have a trade on either the S&P 500 or the NASDAQ 100. Last 2 charts. Those are the up charts for the day. Stocks down, bonds and gold up 0.40% for TLT. Now, it's been a down week up until this point, until this day. What do we see going on? Still a down week. Spinning red top means lots of indecision. We are still, however, with the bonds in a confirmed up move on that weekly chart. We have not had a crossover going down yet on the price percent oscillator and the derivative oscillator. Still in the green. When we look at the 2-day chart, what do we see as far as the 20-year bonds go? It, of course, crossed over going down on the last 2-day candle, and the derivative oscillator's gone negative. So we'll continue to keep an eye on what's going on there. What about the 4-hour chart? Of course, it crossed over going down, and this is when we gave you lots of warning about if you were in that up trade on TLT, now's the time to think about seriously pulling the plug, which hopefully those of you who were doing virtual trades in that did, and you took your profits and marched away to live and trade another day. So what do we see, though? It does look like things could be bottoming out a little bit. Does that mean that bonds are getting ready to move up and stocks down? Who knows? We're not forecasters, right? We are what? We are trend followers. Lastly, we go to gold. Gold, of course, has been moving up 4 weeks until the pullback over the course of this last week. However, gold still strongly, at least as the weekly chart goes up. Derivative oscillators lost a little bit of energy, and we've seen that huge spike up in gold be tampered down just a little bit. If we go to the 2-day chart, what do we see? Well, we see the last 2 2-day candles are moving down. Don't have a crossover yet going down, so gold's still in a confirmed up move. Now let's take a look at where things are on the 4-hour chart. 4-hour chart started moving down back on the 11th in the morning, September the 11th, Monday. Moved down pretty much throughout the course of the week, except over the last day. We did have a little bit of up movement in the afternoon on the 12th, but up movement throughout the course of the day, again, 0.44%. So again, keep your eye on gold. If it rotates back over on that 4-hour chart, it's primed for moving. Why? Because our 2-day chart and weekly chart are currently in confirmed up moves. So keep that in the back of your mind and be aware of it. Is it going to happen? I don't know. But if it does happen, get ready to move on it. And of course, gold, beautiful since it crossed over going up, and we had that 4-hour chart give us a jumping in point on gold back around the 28th. Of course, you would have gotten in somewhere around 123 or so. Gold hit a high over the last few weeks of 128.30. Let's see, 128 minus 123, that's $5 in what, a 2-week period? That ain't bad, is it, my friends? So again, practice your virtual trades. Use your trade worksheets. If you really want to supercharge your training, fill out that daily market worksheet every day, that weekly market worksheet over the weekends for Monday, and do your practice trades every chance you get. Document it all on your trade worksheet. That's the way you're going to get good. Spending 10 minutes a day, every day, no matter whether you feel good, no matter whether you're depressed, no matter whether your trades have been sucking and you're ready to give up, if you just keep practicing, it will come to you. That's what the mindset training is all about. Make sure that you get it, listen to it. 3 great trainings. You have to be signed up at chartingwealth.com for the daily market review. It's all free. Keep positive, my friends. Remember, victory goes to those who persevere. God bless. All the best from the entire team here at chartingwealth.com.